The recently released annual economic survey detailed India's growth in the upcoming years. While India's growth is projected to slow to 6.5% in the fiscal year starting April, the medium-term outlook is currently optimistic with medium-term potential at 7 to 8%. In this particular video, we will explore and analyze more about the medium-term outlook. But before we do that, please do not forget to like and share this video. Please also subscribe to our channel, India Business Insights. The period between 2014 to 2022 was regarded as an important period for India in the economic survey, owing to the structural and policy changes that India had implemented in hopes of increasing efficiency and productivity. It further holds the credit boom and the one-off global shocks responsible for the lack of expected economic growth, seen in the form of adversely expected variables such as credit growth, capital formation, etc., in the economy despite the large-scale changes in the last 8 years. This situation is also seen as bearing a stark resemblance to the period between 1998 to 2002 because of a similar situation of growth returns being yielded only after a lag due to temporary economic shocks. The growth dividends were visible only from 2003 once these shocks had faded, and a similar trend is also being expected for the coming decade till 2030. An improvement has been reported in the balance sheets of the banking, non-banking and corporate sectors. The economy has started benefiting from the efficiency gains from these digital technology-based economic reforms. All of these, it is believed, could point towards the start of a new credit cycle. Medium-term outlook analysis, the background. The economic survey highlights that both CPI and WPI inflation have fallen below 6% recently. Further, the risks associated with the global commodity prices are likely to be lower in financial year 24 given the expectations of a slowdown in advanced economies. However, domestic retail inflation may not fall to the Monetary Policy Committee's 4% medium-term target in financial year 24. The survey believes that the budget estimate for the fiscal deficit will be achieved despite the pressures from increased food and fertilizer subsidies and reduction in taxes on fuels. The survey also highlights that the current account deficit is expected to widen in absolute size in financial year 24, but likely remain similar at around 3.3% to financial year 23 as a proportion of GDP. Further, trends in the dollar index and the US policy rates would determine the movements in the INR. Medium-term outlook analysis, growth magnets. They are of the opinion that once the one-off shocks recede and the spike in commodity prices in 2022 wears off, the financial cycle is certainly poised to turn upward. The report talks in length about the growth magnets for this decade 2023 to 30, which could help India grow at the expected rates. India's current growth outlook is much better than the pre-pandemic years, and the Indian economy is prepared to grow at its potential in the medium term. This is primarily being attributed to the healthy financial system developed over the last few years. A healthier and longer credit cycle than before is also expected. Bank credit growth has been in double digits for some time. This is also supported by a recent IMF working paper that analyzes the credit to GDP ratio gap, bank balance sheets along with the GDP growth in India since 2012 in order to emphasize that better capitalized banks often result in higher credit growth, ultimately resulting in a higher GDP growth. The second factor that will prove most important to India's economic growth in the medium term is the digitalization reforms. They have increased efficiency due to greater formalization, more economic opportunities, etc. A fact that was also supported by a recent IMF article which also speaks about the more than expected dividends from digitalization that could increase India's medium-term growth potential. Such reforms along with the government's skilling initiative is expected to help unlock the benefits of the demographic dividend in the coming years. Another factor to be considered is the evolving geopolitical situation. Pandemic-induced supply chain disruptions, global trade tensions, as well as the conflict in Europe has forced multinational firms to look into diversifying their production bases and supply chains. This presents itself as an opportunity for India that can now try to establish itself a credible destination for the same. The recently published Chief Economist's Outlook 2023 highlights India's opportunity to gain from these global trends of supply chain diversification. Further, the reforms undertaken in the last 8 years are also expected to result in lagged returns which are responsible for the positive medium-term outlook. Creating public goods to enhance opportunities, efficiencies and ease of living, trust-based governance, promoting the private sector as a co-partner in the development, enhancing productivity in agriculture. In conclusion, the report is confident in the fact that the Indian economy had not lost its vigor, nor have government reform measures their effectiveness. And as negative shocks fade, the inevitable effects of these reforms will shine through. A restored credit cycle will rejuvenate the Indian private sector capex cycle. Further, the growth effects of the maturation of India's public digital infrastructure are inefficiently understood. However, formalization and financial inclusion that it has enabled are definite benefits. Apart from this, the higher economic efficiency from public digital infrastructure created over the last 6 to 7 years could also potentially add about 30 to 50 basis points to the GDP growth. The report seemed optimistic that India will achieve an average of 6.5% real GDP growth in the medium term. In addition, it is felt that if other suggested reforms are implemented in the coming years, India's potential GDP growth could rise to 7 to 8% per annum in the medium term. With this, we come to an end of the video. Please do not forget to like, share and subscribe to our channel India Business Insights. Thank you for watching.